We just got results from tech giants Amazon and Meta. Shares of both shooting higher. Meta up almost 12% now here at Overtime. Let's bring in Rohit Kulkarni of Roth, MKM, and Scott Kessler of Third Bridge. Good afternoon to you both. Rohit, I'll start with you, and I will start with the big mover of the session, which is Meta, which beat on almost every metric, and then, of course, has now initiated a 50-cent per share dividend. Your thoughts?
It's hard to find any yellow flags in this earnings release. Absolutely. Almost fine-tooth combed. I looked through the earnings release. There are very few yellow flags. The only questions I would have is, why dividend now? Why would you want to pay a dividend when you're accelerating growth and you have umpteen investment opportunities? So maybe that's just a question for management as we head into the earnings call. And then the only other smallest of yellow flag is, when do metaverse-related losses start to slowly slow down? I think those are the only two questions that come to mind. Otherwise, you have an accelerating company. You have a company that's probably taking away market share from Google, which I believe that's the narrative that's going to seep into the market tomorrow and day after, that builds another move on top of what we already have. So absolutely nothing to see negative on this print. The only two questions I have is dividend and reality losses.
Okay. Scott, want to get your thoughts on Meta, too, as we go through the numbers, especially since it does seem like if you had to pick out a yellow flag, to Rohit's point, it would probably be the fact that the metaverse-related losses did seem to come in bigger than expectations.
Look, I mean, people can pick on Meta for the next number of years in terms of their progress when it comes to Reality Labs and the metaverse. They've backed away quite a bit from the pronouncements that they made, I don't know, 2+ years ago at Facebook Connect, when they were talking, in fact, about the metaverse and how they were renaming the company. The reality here, pun intended, I guess, is that 25% revenue growth is significantly in excess of what people expected. The dividend payout, I did some quick math. I mean, it's going to amount to, I don't know, maybe $5 billion a year, which is nothing to sneeze at. But their free cash flow, I think, for the quarter was $11 billion, for the year, $43 billion. So I think they're expressing a level of confidence in their ability to continue to grow and to deliver here.
Okay, Rohit, switching gears and going now to Amazon. AWS hit the expected growth at 13%. But I wonder more your thoughts on costs here, because a couple of years back, Amazon was in the thick of it with having overbuilt and overhired during the pandemic in the logistics network. Now we're starting to see efficiencies build with that scale. Andy Jassy has even been talking about how when you reach a certain level of efficiency, even in same-day and next-day delivery, that gets cheaper for you. How does that play for investors in this particular economic environment?
I think Amazon is a slow-moving freight train that they're slowly moving into the right direction, and acceleration is the name of the kind of earnings that I would highlight. Look at e-commerce is accelerating, third-party sellers is accelerating, advertising is accelerating, subscriptions are accelerating. So everything is accelerating and going in the right direction for Amazon. On top of that, almost the 2-year process of reducing their cost basis is now starting to bear fruit. Last time we had checked that when they built out their fulfillment center footprint, almost more than what they've built in the last 15 years, they built that in 2 years. They probably need around 2 to 4 years to build into that. So I think now we are on that 3rd year mark where Amazon is now going to show leverage in North America retail, in international retail.
Okay, Scott, it looks like we're having a little trouble with your shot there. Scott, still on Amazon, how much do we need to be worried here about an investment cycle, whether it's the traditional logistics investment cycle or an AI investment cycle, because those accelerator chips aren't cheap? Or are we in an environment, and with Andy Jassy, where he's going to telegraph that and not surprise us?
Yeah, I'm not too sure about that, John. Amazon has never been shy about committing significant amounts of capital over the longer term. I focus predominantly on the AWS and advertising businesses, and I have to take issue with the notion that AWS here has been a huge win. I mean, the reality is that, yes, they saw acceleration in growth. They met some forecasts. But if you look at Amazon and AWS, the growth pales in comparison to what Azure put up just a couple of days ago. And I think there is a significant question around market share shifts over the next couple of years. I think people are best suited perhaps to look more at the advertising business, which grew at a 26% rate, 15 billion in revenue. The advertising business, according to some experts we talked to, is going to be a major driver of growth for years to come.